Thursday, June 6th, Stan Ehrlich market analysis. Minor announcement. I will not be able to publish the YouTube recordings starting next Tuesday, June 11th, and I'll restart on Wednesday, June 19th, about a week later. So you guys know I start out with the stock market indexes. I go to futures. We have a very interesting development in progress right now because resistance areas, intermediate and short-term both, are starting to look a little bit interesting. We have made, in some cases, and in some cases we have not made, new highs for the total rally. And in those cases, whether it's new highs, it's historic new highs. The E-mini has been able to just barely get above, and that's this morning, the high of a few days ago. The high of a few days ago was just a little bit above the high that we had around the end of March. Double top formation still looks plausible, but we have to start going down right away. On the other hand, it's only fair to say if we turn around and start to rally again and close above previous highs, there could be a very explosive rally. I'm not voting for the rally at the moment, but I realize that could very well happen. I'm voting for the fact that the double tops, a very small one over a couple of weeks and a broader one over a couple of months, are going to turn out to be correct. Let's look at the very short-term S&P E-mini chart. I got a 10-minute chart up and running at the moment. The blue line at the top, which is an arrow from today's high tested 3 times, goes all the way to the left for about 2 weeks and is just above that top. This is in detail the short-term 2-week possible double top. We have already broken into new low ground for today, but we are nowhere near getting below yesterday's low way down here, which seems quite unlikely. But when this thing gets going, look at what happened just a few days ago. In about an hour or so, it screamed bloody murder straight up late in the day on May 31st. So don't turn your back. Minor rally up to the yellow line, or maybe even up to 53.62. If this stops there, if it gets there in the first place, turns down, makes new lows, it's going to add to my bearish expectations. Very important. This could be the early stages of a big move down. Now, how big? Remember, this is a small double top formation over a couple of weeks, and this is the downside breakout level, 52.05. And although I haven't measured the objective on the small double top, I can say that it would be something along the lines of, 50.80, and that starts a support level. That's interesting. Not much of one. Let's just see if this thing, kicks in here and we start to break down. Look at some of these other charts very closely. The S&P 500, we simply did not stop on the spider at previous highs made again in late March, but we did gap up. That could go down in the books as an exhaustion gap, but that really means that we have to start closing below the minor, and it doesn't look much like a double top at all. So let's not call it that. It's just trying to top out in some way, shape, or form, maybe. But we do have an ER red sell signal on the exact high day so far, May 23rd, point blank. And didn't we also have one on the S&P E-mini? Absolutely. I remind you, 3 of them. The high day, next day, and a complimentary, if you will, was Tuesday after a holiday Monday. A little suspect on that one. Also, one part of the top formation earlier in late March. Going back to the spider daily, and now the 5-minute spider. So gapping up a little this morning, and now I'd love to see it keep on coming down. Some of my older trades are a little bit of a profit, and much better, several days, small loss, all of the strategies. Now, QQQ has a red sell signal on the top of the market exactly so far. It gets better. The DIA had 3 of them in a row. Stay tuned. We are still with a very slow trailing stop, STS, smart trailing stop, short. So if this does indeed start to turn around and start to slide substantially in the next couple of days, what is today? Thursday, it's probably not going to get that low to break out of this tomorrow or today, but maybe next week. I'll be gone. So 443.05 is about the number to watch. If we try closing below that, then we're going to drop off probably down into the area of where it bottomed out in late April, middle to late April. Next, QQQ. We have not made higher highs for the trend. Today's high came back up into the same range we saw a couple of weeks ago. So I can still call this a possible double top. Not the best I've ever seen. We need to turn around and start to make new lows more aggressively, or it's just going to explode. NQ, the NASDAQ, did make higher highs, and it is the only one that got overbought today. The other ones did not get overbought. So we have overbought conditions, slight new highs for the trend yesterday and today. So I need a lower close at a minimum, and we are a little lower for the day momentarily than yesterday's close. Now, lower the better. So keep an eye out on the NASDAQ, and here it is. We have made new lows for the morning just lately. We're on a little bit of a rally momentarily. Keep a close eye on these things. Okay, Dow Jones YM, we picked the top day, April 1st. We have a buy signal on the low day, April 19th. We have a sell signal on the high day, May 20th. So far, so good. This rally is a minor new high for a few days. Too bad we didn't get a buy signal a few days ago on May 31. It didn't get lower than previous day's low, so no signal. We did get oversold, though, and we were testing support. Not much, but some. I don't trust the rally. It made a new high for a few days. It's about where it opened this morning, and I just need to see this thing sink. Now, you know the DIA, the Dow Jones, and its affiliates, YM, have been the weakest, haven't made new highs, have dropped faster, quicker, better, stayed lower, et cetera, while these last couple of months have evolved, and the QQQ has been the strongest, the fastest, the biggest, the bestest. The S&P is caught in the middle. We're looking at the 30-minute, half-hour Dow Jones futures. This is the top with a variety of signals that we had, a couple of minor small losses, and a whopper of a good profitable, and that's the green trade line, as we call it. The yellow is a stop trailing automatically, 100% automatic, everything you're looking at. So we're back to a minor support with the trading range we have in the last few minutes on this 30-minute for the last couple of hours chart. We need to start dribbling off to new lows and then get below the earlier low today and keep on going. Next, the Russell. Okay. Can't say too much about it. We're going sideways for, what do you want? Perspective in time? Actually, since December, if you want to talk about major tops and bottoms. So we don't have any major upside breakout that worked. It was in resistance and got overbought. We don't have any downside breakout that works. It just broke the lows and turned right around that day and turned right back up. Oversold conditions, not quite a bullish engulfing, unfortunately, but close. And on the short-term Russell, this is the daily, sorry. What was I looking at right there? Yeah, I got two dailies. I apologize for that. Skip on it. Now bonds. Bonds have made new highs, broke through a resistance area. The new highs are for a decent couple of months of time, but there is a variety of resistance levels on the way up here. That's one. There's a one right in there. There's another one. And of course, the one around the tops that are very important for the last 6 months plus. Now, I remind you, we did get the bottom of the market to the exact day on October 23 of last year. And it is doing approximately, not as accurate as I like, what I have wanted. This big downside retracement is a disappointment that we weren't going to get interest rates lowered as quickly as we thought back here in December, January. So a retracement settled in. Now we're a little bit more confident, apparently, that the rate breaks, if you want to call it that, is going to happen on time, or maybe a hair sooner. Who knows? The market likes it, whatever it is. And we are in a position to rally pretty strongly, pretty quickly. That might not help my expected decline in the indexes. So if I'm right in the indexes, then this is going to stall out and pull back somewhat, maybe back to this yellow range right here, 115. Otherwise, it may just start to go sideways a little bit, allowing the indexes to drop for a bit. I just don't want to see too much strength here. And that's the reason why. But if it takes off like a bat out of hell, straight up in interest rate futures, then the stock market indexes may start to explode. 10-year notes, essentially the same commentary. Current prices are making minor new highs for 6 weeks. But there are resistance areas slightly above the market, so we could just bang against something and turn down for a little bit without doing any damage to the long-term bottom formation or development. Let's look at crude. We got very oversold the last couple of days. No surprise, started a rally yesterday. We got to follow through today. I mentioned it getting up to 76.19, I'm sure. We're almost there as of today, not quite. But that looks like the first resistance area, and I will put a little line in there for my own sake as well as yours. That's a little too high, dropping it down, so about right there. That's good. So that's the first little resistance area. Anything in here, and then this is going to be much more profound right there. Okay, I'll do this also for you guys. F12. I like that one, especially with the sell signal, the ER sell signal on top of it. And right in... Nope. Yeah, that's it. That's right about it. Okay, fine. So that looks highly likely, and it's just a little bit above and below 80. We got natural gas. Not sure what to say. It also is kind of getting caught between a rock and a hard spot, and it might just bounce around in here a little bit. The last signal was a sell signal, a little late, of course, although it did work for a couple of days. So there was a little bit of money in it. We love to see the ones that are the beginning of big breaks like that one, that sell signal right there, but they don't always happen at major bottoms, for example, like that green one right there. Okay, next is heating oil. Great sell signal on that day. What happened? Well, we made new lows the last couple of days, but you're diving into another huge, big vertically support range, inside of which I probably should try to pinpoint a few more fine-tuned levels. But for the moment, the market is bouncing up off the top of this big support green area. I'll expand a little to the right. And now we're getting caught between a rock and a hard spot slightly. We did get oversold in support. Rally is no surprise. Can we get up a little bit more? Probably 2.390, 39.42. That seems pretty likely to be a good candidate for this rally to stop. If that does happen and we start to turn down to new lows again, we're going to drop a lot more. This would be construed a few days ago as a major downside breakout. And our little rally today back up to the beginning of a minor resistance area is simply a test of overhead resistance. And that's exactly where frequently markets will stop and make new lows. Next, gold. Minor new high, last couple of weeks, no big deal. Big formation here is, and it's not that big, a 6-week or so double top formation. We have yet to break out below the trigger point of 2308. If we start closing below that price, we should go down to 2143, which matches a downside objective and a bit of a support area on top of that. Let's also hope that we get oversold at the time we get down there, assuming we can. Right now, it doesn't look like it because we're going up, making new highs, kind of sticking around that price level. We'll see what happens next. What about silver and platinum and copper? Well, silver, big rally today. I wasn't expecting it today or soon. I thought we might go down a little bit more, but it held in here. Came up a little bit yesterday, and not sure what to say about this. This obviously looks like major upside long-term breakout. Here's your test of support. It's exactly the opposite of the other chart I showed you a moment ago. And made new highs, came back into a support area, almost exactly, not quite, and then turned back up again. I like what I see. What can I say? I have to be bullish here on a continuation of the move up. I don't have any major top formation, no major sell signals. Platinum, sell signal on top of the market, yay. Okay, so that was May 20th, and we've come down quite a bit since then. No buy signals. We're now below a resistance area that used to be support and worked for a little bit, and broken just 3 days ago, 2 days ago. Now coming back up to 1019 would be pretty normal, and maybe even up to 1042. But turning down at either one of those levels or between the two and making new lows will be quite bearish. I kind of have to go in that direction. But I do realize that this break in the last month doesn't do any longer term, it doesn't do any damage to the fact that we have a whole mess of lows in what you could call a rounding bottom. And that's about it. So I don't know. I'm kind of caught between longer term bullish and maybe short term a little bit more weakness. Now, high grade copper tested support, turned around, started to head north. I'd like to see it make new highs. Not quite yet. Didn't get quite oversold. I think it's going to keep going up. Beans, oil, meal, corn, and wheat. Again, we've got 4 out of 5 of these major bottoms to the exact day in the last couple of 3-4 months. Now, that is soybeans low on April 19th, and we caught the bottom. There has been a double top. It did break out to the downside just a few days ago. Today's rally high is right back up against the lows between the two highs of the double top. A perfect spot for the market to stop moving up. Here's my little horizontal resistance line, just like that, perfect. So will it stop and get all the way down to its minimum objective of 1152? Or in oversold condition, in a larger, longer term support range, is it finished going down and will never get down to the objective? And that low on April 19th could be a low for much longer to come. Can't be sure about this. Let's just wait a little bit on beans. Soybean oil back to support, turning around very nice. I was hoping this would happen, kind of expecting, but we didn't quite get to oversold conditions. So the key here is closing above 46.78. If that happens, then the last shoulder low on this very large 2-year formation, I've been talking about it for a couple of months now, was going to look a lot better on a very long-term, extremely bullish basis. Maybe they're going to find a way to make soybean oil into energy or something, whatever, you know what I mean? Very valuable. It's going to go up to 90. I have to say the objective is 93, I think, for the giant formation. Let's not talk about it yet. Next, meal. Double top, bearish signal on the top, second high of the double top formation. Great. It's worked almost every single day, except for yesterday. It started to go up a little bit, and it's now slightly higher again. But the rally has been right smack dab up to the resistance level, which is the lows between the two rally highs, creating the double top. So the minimum downside objective is supposedly in meal still down to 340. Next, oversold conditions in corn the last couple of days, very close to a support level. Looks like it's starting to take effect. We got a good rally going here this morning. New highs for a few days. I need to close above 476 in order to put some fire underneath this thing again. Then it's going to go up to 5 to 520 maybe. What do we got for wheat? 2 sell signals. First one worked only for a couple of days. The second one is in progress. Dropped off, and even lower again today for wheat in a support area. So this is now prime target for turning around and starting a rally like you've seen on some of the other grain charts. So this is lagging behind at the moment. If it's going to rally, I don't see it starting, but we're in support and super super close to being oversold, super. So it could just turn back up again any old time. Okay, cattle, minor new lows. Doesn't seem to want to stay there very well, but this is good enough for the moment. Lower the better, perpetuating the move down since overbought conditions at a resistance area. Again, same combinations that I've keep talking about innumerable times. Also, this time we came very close to a bear trend line across the top of a pennant formation. It's a very, very big one. Goes back all the way to September of last year, where we got a sell signal on the exact top day. Come on, September 19th. And you can see another great one right there, another great one right there, and so on and so forth. So bearish, looking for a little lower levels. Pennant formation is the big deal. We might just get bouncy, trapped inside of this. And cattle, hogs did have a head and shoulder top. We did have, again, a bear signal, ER sell signal on the high day in hogs. And we have met my minimum downside objective a couple of days ago, which I had pointed out probably in the time frame of late April and maybe late April, because I would have seen the shoulder and the neckline and measured it and all that. So it's past tense, that worked like a charm, except we got a little complicated with a buy signal that did not work. We got stopped out right away. Actually, I can see, in fact, that there was a day trade profit scalp. Oh, that's nice. But the overnight probably didn't work, and I don't have that turned on. Daily data and OJ, and we're finished. Let's check on E-mini real quick. I just want to see if there's more downside. Nope, it's come back up to that little resistance. So this could be a good spot for it to stop moving up and turn right back down again. Right where to, whoa, didn't want to do that. Sorry. I wanted to do this. There we go. Yep, that's it. What is this? A 10-minute chart. So, okay. Have a great day. Remember, no YouTube starting next Tuesday, the 11th, and I'll restart June 19th, Wednesday, following week. Have a profitable trading day.